Welcome back to Capital Gains. Joining us now is Jim Bianco, President and Macro Strategist of Bianco Research. Thank you so much for joining us. Now, we've been talking about what the betting markets are doing. If you could briefly just give us a quick 101 on this for people who aren't familiar with sort of what it's really tallying up and how that's reflected in perhaps versus polls and other things that we're looking at.
Yeah, so 101 on the betting markets. They've been around for a long time. The earliest recorded betting markets were in the 16th century when the Italians were betting on who was going to be the next pope. Famously, in the earliest 20th century, Winston Churchill was supposedly one of the biggest manipulators of betting markets in the British markets, always betting on who was going to win in Parliament. So, the reason I bring this up is that this is not new. In the United States, the betting markets go all the way back to the Civil War. If you were in Topeka, Kansas in 1888, and they wanted to write a story about who's going to win the election for 1888, Benjamin Harrison, they would actually quote the betting markets that traded on the floor of the New York Stock Exchange, which did from the Civil War until the 1930s. So they kind of went away with the Securities and Exchange Act in the 1930s and the advent of George Gallup with polling. And they came back in the late 80s and early 90s with the Iowa political stock market. And now I went through all that because I wanted to make sure everybody understands when we talk about these betting markets, these are not new. They are just new because we've got the internet that has made them new. We've had them electronically through the internet since the 1992 election. So we've seen them in various forms: Iowa political stock market, trade sports, in trade, predicted, and now we've got Kalshi and Polymarket as being the two bigger ones. Currently, Trump is leading in the betting markets. He's trading around 62% probability that he's going to win the election on Polymarket. He's trading around 57, 58 on Kalshi. The big difference between the two is Polymarket has an agreement with the Commodity Futures Trading Commission that it cannot accept U.S. investors, but Kalshi can accept U.S. investors. And it won a court case in early October and started trading on October 3rd.
So, Jim, and I'd like to point out to people, Real Clear Politics has an aggregate of, I think it's an aggregate of 8 betting markets. So if you just want a snapshot, it sort of wraps up what they all think. Help us understand what should ordinary people think about? Is this giving us an accurate gauge of where this election stands, or is it distorted by the nature of the bets and by the fact that this does not represent the public in general? It represents people self-inclined to bet on markets, and most of them supposedly aren't even Americans. So, is this 62% for Trump? Is that like real or not really?
So there's two ways to answer that question. The first way is if you look at the polls, whether you're looking at, and most people tend to want to look at polling averages or aggregates that are put out by 538 or Silver Bulletin, which is Nate Silver's Substack.
And Real Clear Politics has that too. Yeah.
Yeah. Real Clear Politics, The Economist magazine have that. And if you start looking at those, they also put together models off of this as to who they think is going to win. Now, depending on which model you look at, Trump is leading between 52 and 56%, between, say, 538 and The Economist magazine. Well, he's trading at 57 to 62 in the betting markets. So he's trading slightly above that. Now, that's not unusual for two reasons. Reason one, Trump has been gaining ground over the last few weeks, and the whole point of the betting markets is they're supposed to anticipate what's coming next. So they're kind of thinking, well, that trend is going to continue. Doesn't mean they're right. It's just that there's a logical reason for why it's trading there. And the second thing is these are probabilities, and people really mistake what a probability is. I see it all the time on Twitter. Trump is leading by 20 points, 60-40. That's not a 20-point lead when it's talking about probability. So being it's football season, I've tried to put this in the football metaphor, and I'll use Trump. If he is trading under 66%, which he is and has been since Harris came into the race, think about it as in a football game, he's leading by less than 3 points. All she's got to do is get the ball back, kick a field goal, and she wins the game. It's not insurmountable for her to do that. If he leads by more than 66 to 80%, then he's leading in football parlance between 3 and 7 points. She's got to get the ball back and score a touchdown. It's a little harder. If he's leading by more than 80%, he's leading by more than 7 points in a football metaphor. Now she's got to score twice, and it becomes even harder from there. So with him trading 57 to 62, late in the fourth quarter, to stick with my football metaphor, yeah, she's behind. He's ahead. And yeah, based on where the polls are and the betting markets are, that's about where he should be trading. But it's hardly an insurmountable thing for her to overcome in the final days of the election. If she can overcome it, that's the next question to be answered.
Yeah, I want to follow up on that sort of anticipation question. That difference between like what the Nate Silver model shows and what the betting markets are. You've summarized these markets in a way that I think is helpful for people. It's a reflection of current polling plus future expectations. And I guess I'm curious. My question is it, could you just replace future expectations with vibes? And is that a better way for people to understand it? That this is just sort of how people are feeling, a snapshot of how people are feeling at the moment, as opposed to some crystal ball about the future.
Trader vibes.
Sure. Yes, sure. You could do that. Think about the stock market, right? It's discounted cash flow of earnings plus some multiple. And what is multiple? It's vibes. It's how do you feel about it? Is it a good company or a bad company? Well, that's kind of what, the vibes are. And where do the vibes come from? Look, I'm making one assumption when it comes to the betting markets. Yeah, you're right. They might be a bunch of crypto bros in there because Polymarket, if you're not familiar with it, trades. It's a crypto market. It trades on the Polygon network, on the Polygon level 2 on the Ethereum network, and you need to use a stable coin to buy into that market. So yeah, it's a bunch of crypto bros, and they're all MAGA hat wearing guys. Fine, that might be true, but they want to make money. They're there to make money. So therefore, you could say, sure, that it's a bunch of those guys. But if they're there to make money, it's an accurate representation. And yes, those vibes are there. And I think that the reason those vibes are there is most of them tend to be statistically oriented, and they're just looking at charts of the betting markets and doing simple technical analysis and saying Trump's in an uptrend, and you want to buy an uptrend. Trump has momentum. And so that's where I think it's really going. The vibes is not that they like his border policy or they like his tax policy. I don't think there's anything to it more than just simple technical analysis.
So, Jim, when you have whales coming into it, like Freddie 9999, throwing these massive bets in that then sort of play into that psychology that perhaps Trump is doing better than expected, but it is only based on those betting markets. How does that skew things? Does that tend to be sort of an art imitates life reality in the end, or is it just keep sort of the betting markets in their own lane?
No, I don't think. I think that we vastly overstate the amount of the whales, in these markets. Look, I've been following these markets. I've traded in these markets since '92. I lost a ton of money in them in 2000 as well because I didn't read the contract correctly. I thought I was betting on who was going to be the president, but it turned out to be the popular vote, and that's why I ended up losing a lot of money. So read the contract and make
Best
sure
way to learn,
you know what
lose money.
Yes, exactly. Read the contract. Make sure you understand what you're investing in as well. As far as the whales go, no. See, the assumption there is somebody's going to dump a lot of money in this market. It's going to make it trade in a way that you can't explain from the polls or the vibes or the trend, which I don't think is the case. Therefore, the rest of the country is going to notice that they're trading at a wrong level, and it's going to change everybody's vote, or it's going to change the amount of people that want to turn out and vote. I don't think it's going to change a single vote. It's not worth anybody's time to manipulate this market, because if you want to push Trump to 99 tomorrow, that's not going to get anybody to vote for him. If you want to push him to 1 tomorrow, that's going to get nobody to not vote for him. So what's happened with these whales is they're just speculating. They're just speculating in big numbers is what they're doing. And these markets, even with the whales, I think are trading in appropriate ranges. Now, the last thing I'm pointing out, in watching these markets since the early 90s, in the last 10 days, and we're 12 days out, you could expect the volume in these markets to double 1 to 2 more times. So yesterday we traded about 75 million shares in these markets. They were trading 28 million shares a week ago. I wouldn't be surprised if by the day before the election, which is in 11 days, they're trading 200 to 300 million shares a day. All of a sudden, that 40 million shares that Freddie 999 owns is going to look very, very small in the regards of the entire market. So if he manipulated that market to a place where it wasn't going to be, it's already overcome that, and it's kind of settled out into its proper place.
Guys, I mean, Freddie 9999 supposedly is a French trader. I assume he's a Yahoo Finance user. So, Freddie, I mean, you're watching this show. We know you're watching. Come and talk to us. Jim, what I want to ask you might be the last question about betting markets. So there are different forms of the so-called Trump trade. A direct one is Trump's own company, DJT, Trump Media and Technology. And then, Wall Street has identified some other trades. I mean, crypto is probably one of them. Utilities is another. So the question is, do you think real traders in the financial markets are seeing what's happening in the betting markets with Trump gaining momentum? And based on that, they are increasingly making these other Trump trades in which they are actually betting on Trump, however they might be doing it?
Oh, I think it's a two-way street with that. You're right that Trump, DJT, Trump Media, which owns Truth Social, is probably the biggest meme stock in the stock market right now. And it's just trading on the vibes and the belief that whether or not Trump is going to become the president or not. And I think that a lot of the bettors in the betting markets are looking at DJT and seeing it's rallying and saying, we got to buy here. And a lot of DJT people are looking at Polly and saying he's rallying there, so we got to buy there. So they kind of feed off each other. And, if you overlay them on a chart, they're all kind of the same thing. Bitcoin is perceived to be, it's an orange coin and it's an orange man. It's perceived to be kind of tied up with Trump as well. And then Wall Street's got all these other types of ideas. You're supposed to buy the prison stocks if Trump isn't elected, or, the defense stocks because he's a law and order guy, or the defense, not that he's going to go to one, or he's a law and order guy as well. You're supposed to buy technology if Harris wins. So a lot of this is like a two-way street, and it's all part of the bigger game of trying to, game out who's going to win the election and trying to make a profit off of it.
Guys, just for
Real
everybody,
quick before we go,
go ahead, Ben. Sorry.
real quick before we go, what do you advise? What are you advising either clients or family members who are coming to you to see these betting markets saying, should I put money behind Trump? What do you tell them?
Well, you put money behind Trump because you think he's going to win. You don't put money behind Trump because you think it's going to manipulate the markets, or if it's going to make you feel better that you put money behind Trump, put a lawn sign out. It's a lot less money.
That's true.
Guys, I want everybody. So
Yeah,
don't leave Yahoo Finance. I'm going to try to do a Trump trade next week. I haven't figured. I'm going to get somebody to help me structure it and hopefully write about it. So you guys can all watch along as I make a really dumb investment decision.
All right, we'll be tracking your progress or lack thereof, Rick. A big thank you to Jim, Ben, Rick, and from myself. That does it for this episode of Capital Gains. Thank you for joining us. See you next
Thanks, Jim.
Thanks much.
Thank you.